Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight the dollar index was a little bit whippy as it trades around 106.50, while this has put a little bit of a weaker play into the currencies. Looking at the Australian dollar, the market is retreated and currently looks towards the region of 66.65 as an initial support. If this level is respected, which I feel may, as it is holding above that midway point on the RSI, could see a rebound back towards the region of 67.25 and reassess as we could see a further stretch, with the overall target still remaining at 68 cents. Overnight, a few federal speakers once again reiterated their hawkish comments and still feel that the aggressive rate hikes are still needed to try and cool off high inflation. Nevertheless, it didn't this time spur up the US dollar, and therefore the markets are holding relatively well in terms of their objectives. As I mentioned, Australian dollar is at 68 cents, with the euro still holding at around 105 as an objective, as the bullish technicals are still holding. Therefore, any pullback may actually see a shallow dip, which is around 103.40 to 102.65, and then maybe on towards that topside challenge. The dollar yen is back towards that top side of 140.65. Keep an eye on this level, as if it breaks, it will negate this current pattern formation that is bearish, and therefore put a slight firmer step into the market and look towards the region of 141.35, 45 and reassess. Technicals, though, are attempting to reinstate the bullish implications, so keep an eye on that RSI also. It was a little bit whippy for sterling, but still maintaining underneath the 120 area and also respecting the support area, which is seen around the level of 116.30-35. I feel that we are locked in this boundary in the short term, as the fact that overall any dips likely to be shallow, and therefore I would not dismiss any upside attempts to reclaim that 120 in the next coming days. Gold was weaker overnight, but still respecting that key level, which is at 1,756 to 58. And while intact, should see further tests towards that top side of 1,784 to 88. But the technicals have broken down somewhat in the last 2 days, so do keep an eye on the level of 1,756, as a break would give further weakness down towards 1,726 as an objective. Oil finally took out that support level after being pretty much vulnerable for the last 2 days, as the 83.70 break has now given us the next move towards the objective of 81, which was reached, and now exposes the level around $78 to $79 a barrel and reassess from there. The trend from the ADX is bearish, so no doubt there will be further weight on the market as the risk still holds negative in the next coming day or two. Well, that wraps it for the morning. Thank you very much for joining me. And as always, look out for the intraday report and also the end of the day wrap.